So I'm just gonna do a auditory commentary on what happened yesterday, Thursday, non-farm payroll week. I think there's a lot of good lessons I can definitely be learning from the price action that happened yesterday, even though it was very difficult to trade as for me actually, a couple of months, I would say 3 months before the me then would have found it very hard, but now because I go with certain rules, which are driven from my study of price action on a day to day basis, I have something to lean on, and that's my experience. So the decisions I made are calculated, they're logical, they're based on sound reasoning, why something should happen. So from the session opening, I noted that we were in discount from over London. We did make this move, generated the equal highs, and then sank into discount after the 8:30 news and just kept going lower. 9:30 kept going even more lower. I knew somewhere around here we might have a reversal. Now, it would have been better if we didn't touch this. That would have been really strong. I would have, longed it on a normal week. I think that would have happened, but because it's NFP, it's going to take its time. It hit this, but then it reversed. Now, I did have the bias that I'm going to go long because this was the drawn liquidity. Counterparty side, this was my drawn liquidity, what I was aiming for. I didn't long. The reason for that is because it wasn't clean, which I expected that. I'm not complaining. There's no love lost there. Oh, I missed out. I missed this. I don't care. So it closed here. So this was a 4 hour and a 1 hour. So this told me that okay, man, like we may go higher still, but 50-50, we could still go lower because look at this body, closing below this. So this was those things that just kind of put me in. Oh, okay. I'm not sure if it's as bullish as I thought it was because it closed here. But then you saw here in the macro. So this is all happening inside of the macro. This move starts. It just kind of hangs around here. Okay. Then creates a shift in market structure here, as you can see. If I just go on it, creates a shift in market structure here, roughly. And then, of course, goes to the drawn liquidity that I did highlight. Now, I would have liked to long it here. Sorry, here, this is the shift in market structure that I'm considering as my bullish signal. The reason I didn't is, first of all, macro. There's no macro. So here, look, it's outside the macro. I would have loved to long here, but this isn't that significant, especially with the close here. I'm not going to consider this. This was 50-50 here. It went here, but could have just gone lower as well. So not going to consider it. I think the only thing that I could, with higher probability, with the rules that I have, would have been this. But the only issue again with this one is this has already smoked my primary drawn liquidity. The primary drawn liquidity is the thing that I expect will, really high probability that it's going to be hit. We obviously did go a little bit higher than that, which is good, into the volume imbalance on the daily here, as you can see, and reacted off of the consequence encroachment from that premium wick, 27th of March. But again, that's something as a bonus. Okay, I'm not demanding that price goes here, so that's why I didn't long here, because for me this is just too premium for me to be buying. But theoretically speaking, let's say I thought, for the sake of argument, it's going to go here. Ignore this. We would use this order block pending order because again, demanding an internal range liquidity in something that's already very premium. That's a must. Stop loss here, not really expecting us to violate this CIVI inversion slash this order block. So this is fine. And then just 2R, bread and butter, nothing more, nothing less. Boom, explodes, literally 2 minutes to hit TP, 2 minutes, boom, And then that would literally be my only interaction in AM session. And then PM session, I've already advised what I did, but this is what I would have done if I was to trade AM. I viewed it, but I just didn't participate. I don't regret it. With the NFP weeks, my rules are very clear. Low risk, I'm going to demand an entry. I'm going to demand certain rules to be met, certain criteria to be fulfilled. If it does get fulfilled, amazing. If it doesn't, amazing as well. No trade taken, no loss. So like I said, 2 minutes to hit the take profit, and then you would just hold the rest until the macro starts. The macro literally started at 1050. Sorry, one more thing. The entire reason I would even consider taking this setup long is, yes, there's a draw on liquidity, but that's not the important part. The important part is time. It was 1050 at that time. That's a macro, we know. So that told me that it is time for us to do something, because it's time for the market to do something. And that something is that it's going to go higher into the counterparty premium side against the weekly side, which is discount. So this is where we would enter. 2R is already taken off here. We're going to move the stop loss to break even at this stage. And let's see if it wants to run here. Macro runs out, and almost exactly, or just 1 minute later, should I say, we hit the TP. So that would have been a very fruitful trading opportunity. Bread and butter, not risking anything higher. Nice and simple. That'll be it for the AM review.